What's up everyone, and welcome to another cryptocurrency market update. In these videos you will learn how to use technical analysis to forecast price movements in your favorite cryptocurrencies like Bitcoin, Ethereum, and others, and also see where we are looking to buy or sell these crypto assets ourselves. So today we're going to be looking at Bitcoin as well as Ethereum. So let's get into Bitcoin on the monthly time frame here. You can see that the R3 pivot here, using the pivots technical indicator that I really enjoy here, gives you some resistance and support levels here. On the monthly time frame, we went up, we hit this R3 up at about 63,500, subsequently rejected off of that level, and now are operating below the R1 pivot up at about 37.7. If you're a long-term investor, like myself, this is still a good buying opportunity long-term, consistent with the trend that we are in, which is a bull trend. So we are expecting a higher low either here or a little bit lower, depending on how far we go. So let's go to the weekly time frame and look at what we're dealing with there. So we have a potential for a weekly bear flag here. Now, this is what we've been talking about over the last few days, which is just that the price action has essentially just went sideways or slightly sloping upwards, with the volume you can see here declining for the bulls. So this last week was not good, in my opinion, for a bullish move upwards. But the other way to interpret this, if you're looking at a chart, is you could say, okay, we've had a decline and we haven't formed a low yet, and this is a doji candle. And so doji candles after that show up after a push down signify a reversal in price action if they're followed with a push up in price. And that's what we're seeing right now. Since the weekly open, people are pricing this doji candle in as being a reversal candlestick versus a bear flag before a subsequent another breakdown. And so if we do see a bounce here, the minimum that we will go up to is the previous weekly high up here at about 39,480. It is less likely than the bearish scenario, in my opinion, because of the declining weekly bull volume here. But it's not out of the question because this is still a doji candle after a significant drawdown. So let's go to the daily time frame and see what we're working with here. So on the daily time frame, we talked about this gray resistance zone before this price ran into it right here. And we talked about that being really the main resistance zone on the daily time frame until about 47K. And so right now, there's pretty much nothing in between these zones besides this daily pivot zone right here, which is at 42K. So if we do end up breaking up, there's not much stopping price from going up pretty significantly. Once we get past the gray level, I should say. So we're in this equilibrium pattern. Price is tightening up. Whichever way we do end up breaking is going to be a very quick move, in my opinion. When you tighten the price up like this and you reduce the volatility, meaning the price movements are not as significant, you can see like this move is, a significant drawdown in price just from like here, this one candle. It's about 30%. The next drawdown was only about 18%. And then this most recent drawdown was about 11%. So you can see that they're declining on each subsequent drawdown. The volume is decreasing for the bulls and the bears. So the bulls and the bears are waiting for the price action to eventually show them the way that this is going to break. So if we break up, my target is most likely this 47K level, I would say, because there's not much resistance. If we look at a breakdown, I would say the breakdown will likely go down to a minimum at 29K here, but more likely this zone down here, which is, I believe, a 2-day zone. Yes, So that's a 2-day zone from back here on December 20th. That is confluent with the S1 daily pivot level there. So that's what we're dealing with on the daily time frame. We're really just waiting for this pattern to break out. If you're a trader, one of the ways you can play this is, you can say, I'm taking a risk, and you can say, I'm going to buy here and put my stop loss below this low and hope that we break out to the upside. Or if you're going to go short, you're waiting for a lower high to be set somewhere below this one, and then you're putting your stop loss above this high, and then you are subsequently waiting for the price to break down below this blue support level, which is a daily support level from back here on January 31st. 4-hour time frame for the old corn. This is the zone that we just pushed into. Now this is very important to note because this is the same exact pattern. This gray resistance zone here is the same exact pattern that we saw right here. Whoops, I thought I had my magnet on. Where I called this on this channel as well. We talked about a short opportunity right here. You can see subsequently that was a very significant drawdown. If you shorted from the body of the candle down, that was about a 7.3% trade on spot. If you use leverage, obviously it's more. Everything on this channel is for educational purposes only, though, and is not intended as financial advice. Just make sure that you remember that, folks, because we're educating out here. So this is the same exact pattern here where this was a support. It should have been a support level because we had a bull trend right here. You can see that once we formed this lower high and broke through it, this acted as very strong resistance right here, and we subsequently broke down from that point. This zone right here, before I even put the block there, you can see that this is the same exact pattern here with a low, high, higher low, and then higher high with 2 candle closes above the key high. This candle right here where people were selling is where they should be buying it back once we return to that zone. We do not. They push right through that zone and close 2 candles below the key low right here, making this a very strong resistance level for price. You can see that we just had an increase in bull volume. If we look at the volume profile here, we can see we have this nice big volume stick right there with this candle right here wicking it right into this zone. Now this zone on the these types of zones, I should say, that where it should be support but then we blow right through it, typically hold on the first test, and that's why this was a good opportunity right here. You can see we push into this pretty aggressively here and almost pushed through to the top, but we didn't quite get there, and then subsequently rejected down and had about an roughly 8% trade there. Now we're pushing into this one, and it's very similar to this one. So the price action down here is there's no trend here. This is just a bunch of chop. And now we're pushing into this for the first time. I would expect a rejection off of this level at the very least on the 4-hour time frame, the time frame that we are looking at. But if we go right through this zone and close 2 candles above it, it'll end up being a support zone that will be valid for a long entry. So that's kind of what we're dealing with on Bitcoin. Let's dive over to Ethereum, the good old ETH. So Ethereum last month had a very curious candlestick right here. You could see extremely volatile price action in the month of May for Ethereum, with this very long upper wick going up to about 4,400 hours and the lower wick going down to 1,700 hours and 1730. So this is a very significant candlestick in terms of this price action. You can see it looks a lot different than these other ones that we've had. This did break the monthly low from the previous month of April, though, and so this technically would be considered a higher low versus the previous low that was down here, and I believe, can't really see because the price action is crazy, back here in September of 2020. So the price action for this month is very likely to be an inside bar because this candle is ginormous. So subsequently, we're going to have to wait for the month of July to really see if we continue up or if we go down. My bias would probably be up, but it depends on what Bitcoin is doing. That bias is based on the fundamentals of Ethereum, though, is not based on the technical analysis here. If we look at this from a technical perspective, it looks a lot more bullish than Bitcoin. Let's compare this on the weekly time frame real quick. So if we look at Bitcoin's weekly time frame, you can see it doesn't look, this last weekly candle does not look as bullish as Ethereum's with the long-bodied white candle here. You can see this one was a white candle, but it was, a doji candle, so not very significant. Ethereum is outpacing Bitcoin on this rise in price today. So far, it's up about 2.8%. It's looking like it wants to come up and form a lower high below this one right here at about 4,400, like we talked about, and make this a low, bouncing off of this support zone that we've talked about in the past. Let's go to the daily time frame. Daily time frame for ETH looking actually way more bullish than Bitcoin's. Once again, if we compare the two, Ethereum is looking way more bullish. So typically what I'll do is, as a crypto trader, I'll look at both of the charts in comparison in the same time frames and see, okay, if I want to make a bullish entry and I only have a certain amount of capital to allocate, am I going to buy into Ethereum or Bitcoin? So in this case, you can see that this pattern right here looks like an ascending triangle pattern where we see a horizontal resistance zone and then a, let's try and get this to line up here. Well, you can draw it however you want, but this is pretty much what we're looking at. You can see the price action is forming this horizontal resistance with higher lows as we move up. If this ends up breaking out, the target for that is going to be roughly about $1,100. So let's move the chart up here. $1,100 up from about $2,800 is going to take us to, yes, right around $4,000. So that'll take us into this white candle right here, which is a resistance zone. This is our first daily resistance zone if we're an Ethereum bull, and that's this level back here from when we had our bull trend. We set the higher low and then we went for a higher high. You can see this held as support right here, and then we broke right through it. So this should act as resistance on the first test. If we do end up getting up to that zone relatively soon, I would expect a short-term rejection off of that level. But if we're in a bull trend, I'm not going to be going short on that level or anything like that. Let's look at Ethereum on the lower-term time frames. 4-hour time frame for Ethereum, very similar to Bitcoin. We had this increase in bull volume over the last 4 hours. This candlestick just closed 15 minutes ago, and subsequently we are running into the same resistance level that we have ran into once before, and that is this zone right here. So this was our candlestick from when we formed a high, low, lower high, and then lower low pattern. So you can see we went into it right here. Here's the entry, stop loss above, boom, we reject down. Right now we have the makings of a bull trend on the 4-hour time frame for Ethereum with our consolidation right here, but then we have our low, high, higher low, and then higher high right here with this candlestick. Now this candlestick, it really depends on where this candlestick closes for if we're going to continue this trend upwards. You can see that the price action is rejecting off of this level for a second time. You can see that if we zoom in and we see the wicks here, we can see the wicks go into this gray zone, and now the price is operating below that. So this zone is still holding for the time being, it looks like. I would imagine that this level needs at least one more test of it, meaning one more rejection down, before we end up getting a push through this zone. I could be wrong, but if we do end up pushing right through this zone and closing 2 4-hour candlesticks above it, this will end up being a support level, and we can look to potentially go long off of that. Right now, the only potential entry that I'm looking for is actually this black candlestick right here. And this black candlestick will only become a valid level that I'll look to go long on if this candlestick closes above the high of it right here at about 27.40. If we do, then this does end up becoming a valid support zone because we changed the trend back to the bull's favor. If we close back inside of it, conversely, then this is not a valid level and I will not look to go long on that. But if I was to go long on that, if we did end up closing, I would go ahead and put my stop loss below that level, and then I would expect a break through this gray zone, so a minimum of the top of this zone. You can see that's already about a 2.63 risk reward, about a 5.36% profit potential on spot. And as always, if you're using like 2x leverage or something, it's 10%. So it becomes a lot more juicy. So that's all I got for this one, guys. If you like this video, give it a like down below and subscribe for future educational content around cryptocurrencies and blockchain technology. And if you haven't already, check out our beginner tactical analysis course you can get 20% off of. If you check out our website today, we have everything you need to get started generating consistent profit trading cryptocurrencies like Bitcoin and Ethereum, where you'll learn how to do volume analysis, candlestick analysis, trend analysis, and much more. So check that out, and until tomorrow, onward and upward.